Matt, thank you so much for having me here with your audience. My name is Arturo Prestamo. I'm executive chairman of Santacruz Silver Mining. We're a silver-oriented producer mining company in Latin America. Our main focus is, of course, zinc and silver, our main producing metals. And we have operations in Bolivia and in Mexico.
Brilliant. Well, Arturo, thank you very much for coming and joining us. We've not met or spoken on this show before, so appreciate you coming on. Silver producer, so producers throwing off cash. We like that, and we'll talk about that in a minute. But give me a little bit of background on yourself. Where have you come from? What have you done that's relevant to what you're doing now?
Absolutely. Well, I'm a businessman here in Mexico, in Monterrey, Mexico. I started the company in 2010. I've been in the industry for the last 20 years, and since 2010, 2012, we came public at the TSX Venture Exchange, and since then the company has been moving along. Changing assets and accommodating things so that we keep growing and building the company as of today, which we're now a 15 million ounce producer for 2022 and with a better budget for 2023.
Right. Okay. I'm looking forward to hearing all about that. And you've obviously appointed a new CFO, but so who are the team around you, and what's their relevant experience?
Actually, we had been building a strong team over the last year and so. The addition of Wayne Corso, a very seasonal mining engineer who is overseeing our operations in Bolivia and Mexico, trying to get efficiencies at each and every area of our operations. And finally, this year, we just recently announced the addition of Greg Orr, a very seasonal and knowledgeable CFO. He comes from more than 20 years with Deloitte being auditor partner. So we're building and strengthening our team together with the assets of the company.
Right. So, let's talk about the assets. So, you've obviously built that up over time, but you're producers. So, can we just kind of into priority order? Kind of just give me headlines on each of the assets and where they are in their terms of stage of development?
Absolutely, Matt. We have one producing mine in Mexico, which is the Zimapan mine. That mine produced in the range of 4 million ounces of silver equivalent. And it has a milling capacity of around 3,000 tons per day. Then we have 3 producing mills and 5 mines in Bolivia, which all combined produce around 12 to 14 million ounces silver equivalent on a yearly basis. No? So this is kind of our portfolio of assets. We have 2 exploration properties, one in Mexico, which is called Santa Gorgonia, and another exploration property in Bolivia, which is called Soracaya. Soracaya is a brownfield project, and we might be advancing this project further throughout this year.
Right. Okay. So, and again, before we kind of get into we're throwing off lots of free cash flow here, I want to sort of understand the kind of share register first of all. So, how does that break down?
Sure. This year, on a 12-month basis, Matt, we're expecting to be producing around $70 million of free cash flow. From that, we still have payments to make to Glencore for the assets that we acquired from them. So we will have to pay around $22.5 million to Glencore every year. No, so but we are
for how long? For how long?
It'll be for around 3 more years. So we still have three more years.
Okay, so there's some money, there's some cash left over, and so what is your allocation of capital over above the down payment paying down the Glencore loan?
Well, after paying that down, our main premise is to start building a treasury and as well to start getting our mines prepared for a better, for a more productive and more, to bring down its all-in sustained cash cost. No, so monies will go to the ground and and to build our treasury.
Okay, so 70 million free cash. Sorry, I'm just trying to dive. 70 million free cash flow a year going forward on the current run rate. You owe currently, well, nearest down at $70 million to Glencore. Once that's paid off, that's done. Do they have any kind of residual rights or offtake or anything like that?
Yeah. We still owe around 80 million, Matt, to Glencore. And yeah, I mean, they have an MPI. They have a royalty of 1.5, which eventually, once we pay these consideration payments, once we finalize, we might be looking into buying this royalty. And in addition to that, we're selling our concentrate to Glencore. Glencore, it's, as you know, one of the strongest off-takers in the world. So we have a very good and very strong relationship with them. So yeah, the offtake agreements are with them.
Right, and do you say you can take out their 1.5% NSR?
Well, eventually we want to buy it back. And but first,
have you got options to? Is there a piece of paper which says you can?
Yeah, technically we I mean at any given time, Matt, we can bring a proposal to the table, but we'll do it when the right time comes. So that might be once we finish with the last consideration payment to Glencore.
Right. Okay. So we understand a little bit about the math there. With regards to your available cash for reinvest, well, in terms of sustaining cash and any other kind of capex obligations or commitments that you've got, what does that look like over the next 3 years?
Capex for this year, just to give you an idea, it's around $35 million for Mexico and Bolivia.
Okay.
And so we have room there to keep building our treasury.
Right. Okay. So making some money there, and then is that the same next year, or have you not looked that far out yet?
Yeah. Well, we have a budget actually for the next 5 years, and it pretty much with these metal prices, considering today's metal prices, it behaves in that range for the next 5 years on average. Right. If you allow me to put it that way.
Yeah, I do. So if you're looking at silver, I think basically, I think most people looking at the silver space have said, look, it's been a bit wonky for the last 18 months in terms of silver price. It's been difficult to raise capital and the cost of capital's been quite expensive. But you're getting to this kind of free cash flow stage. You've got some commitments. Your goal for the company is what? Is it simply just reduce the cost of mining, or is there some kind of upside, blue sky exploration potential coming in here too?
That's a very good question, Matt. Yeah, we have a blue sky potential. I mean, organically, we can keep growing in Bolivia with this asset I was pointing out, the Soracaya exploration property. Soracaya, just to give you an idea, with today's information on hand, it can give you another 4 million ounces of silver equivalent in production on a yearly basis. No, we are neighbors from Pan American Silver at Soracaya property, and I mean it's an area where a nice jurisdiction to build a mill and keep building the mine. So that's something that we have in our portfolio and willing to be putting hands on that property in the next coming months and years to build.
Okay, so I'll come to that. So let's go back to this kind of cost reduction exercise. So what are the tricks that you have available to you to drive the cost of mining down, to reduce the cost of extracting that silver?
Well, there are a few things. First, from the operational side of the formula, if you allow me, there's operations in Bolivia, just to give you an idea, were done in a way that we feel that could be more efficiently done. No, when Glencore came and started operations in these properties, one of their premises was to mechanize the whole mines, right? And we're talking about narrow vein systems where sometimes mechanizing them just gets you into very high dilutions, and at the same time, it incurs in different kind of costs just because of the nature of the mine. No. In addition to that, we're reviewing how the mining methods were done and the preparation of the mines back then. And as we speak, the mines were pretty much reinforced in every single step. Every meter that was advanced and developed was reinforced with shotcrete, with bolts, with notches. So that is expensive. That is expensive to run, and there are many areas that the rock is very competent. So you don't need to reinforce that much, no. So we have our rock mechanics department working hard and working on a daily basis to maximize, of course, without running any chances, any risk in any ways, but to maximize those areas where we are really required to reinforce, and those areas that don't need to be reinforced. That alone will give you savings for, just to give you an idea, but around 10% on the mining costs, right? And in addition to that, Matt, from a corporate point of view, when we got the operations, Glencore, as you know, is a very senior company. They used to have a very robust management in some areas that were just, let's say, working and making reports that were meant to send to the corporate offices. In this case, we don't need those reports, or some of those reports are not required by us. And that will give us, again, some other savings from the corporate point of view. So, yeah.
Okay.
You have work to do.
You've got work to do. So you've got a team of people kind of focused on the cost cutting exercise. What about because you're talking about, narrow vein mining. It's hard, right? You're chasing veins, and you're rightly concerned about dilution there. What do you know about the ore body in terms of the way that you could mine it in a way that perhaps Glencore and others previously have? They've done it differently. Do you have any views about how you mine this thing?
Absolutely, Matt, and that's when it comes the expertise of a company like us, where our focus is mining, and that's our core business, no? So just to give you an idea, we have veins, and we have a system in one of our mines, Porco mine, where you have a significant network of veins, which are narrower than 1 meter, no? Those blocks were left by Glencore because they were narrow, no? But now, as we speak, we're building teams that will come with jack legs and will work on a more artisanal method, and we'll be getting higher grade, because these are higher grade veins, and that will allow us to increase volumes and of course with less dilution. So we'll be more selective on how we're mining these deposits. Okay,
so you've inherited a lot of data there, obviously, which is going to save you a ton of money. Can we just talk about the kind of exploration component of this? I know you're miners now, but you still also got to keep looking. You got to still work out where you're going next, plan for the future. So, have you allocated an exploration budget for?
Yeah, absolutely, Matt, and that's a very interesting question. And let me give you just a short data here about these assets. And I'm talking about Bolivia, but we can relate to Mexico as well in a moment. But these assets, this Porco mine and Bolivar mine, just to give you an idea, Porco is one of the oldest continuous mining operations in America. This mine has been running for 500 years, literally non-stop. As for Bolivar, you have a 200-year history, a track record of non-stop. The mine has not stopped for the last 200 years. So, yeah, absolutely. We have a budget for exploration, which is already included in our Capex. I don't want to tell you exactly what number for each of the mines, but we have a significant budget. But as we speak, we're building as well a technical 43101 compliance report, resource and reserves estimates, which we should have by the end of Q1. And in line to that, we're doing a very aggressive drilling campaign at all of our mines today, which, as we have today, historical resources, as we're treating them as at this moment, we have around 8 years of mine life on average in each of our mines. But we are positive that we're going to be able to increase the mine life by these exploration activities that we're undertaking as we speak.
Interesting. Okay, and then obviously you obviously got a few mills in there as well. Are they all operating at nameplate capacity at the moment, or is there room for expansion there?
For expansion for what, Matt? Sorry.
So the milling capacity that you have, the installed milling capacity.
A very good question. We have 3 mills. On average, they are 1,300 to 1,400 tons per day. The mills are, Matt, running today at full capacity. The mines are pretty much delivering the capacity of the mills. And let's remember, we have a company as well in Bolivia that it's a trading company, that's San Lucas Trading Company. This company, what it does, it purchases ore from all the small miners in Oruro and Potosí, which are the highest silver grade areas. And this trading company processes this ore in our 3 mills. So every now and then, San Lucas needs to fight with the mines because they need to get some room to process this ore that has been purchased. So it's a very nice complement of assets or companies, as it guarantees that your mills will always be running at full capacity. So in other words,
right. So the mill can sort of top up or maintain its margins. I'm sorry, does the trading company sit within Santa Cruz, or is that part of another?
No, it sits with Santa Cruz completely. It's absolutely.
Oh, fantastic.
Yeah.
Okay.
It's a beautiful business model, actually, because in addition to guaranteeing the full 360 days running of these mills, it also gives you it's a good contributor for the communities. No, we have brought all these small miners to the formal economy. We pay them with a debit card under the formal financial system. We retain their taxes and we pay them to the government in Bolivia. So it's a great contributor. In addition to that, we're very diligent in the audit that we do or the due diligence that we do to all these small miners, just to make sure that they comply with the safety standards, with all protocols of safety, not having children working on the site, and all those important policies that a responsible miner should always keep in mind. So that's also a contributor on the industry. Okay,
so responsible mining, and miners should be held accountable. And I think focusing on that is really, really important. So with regards to, I'm just trying to look to sort of again back to that kind of growth story. All companies need a growth story for shareholders and potential shareholders to understand what the potential is. Why should they hold on to their shares? Like we've talked about, obviously, kind of building up that kind of cash reserves component whilst paying down debt. I'm treating Glencore as a debt component. And whilst doing the exploration and mining more efficiently, I get all of that. But what are the other kind of opportunities ahead of you as you see it now that you are a producer?
Right. Well, that's a interesting question. This year, actually, Matt, our focus will be to consolidate. Just to give you an idea, 2021 we end up the year with around 3.8 million ounces in production. 2022 we're ending the year with north of 15 million ounces. So it was a huge growth. So 2023 will be a year of consolidation. We think that the growth aspect has been checked down over the last year and this year. So our responsibility right now is to consolidate operations to make sure that we met our budgets, make sure that we met our all-in sustained cash cost, and make money out of these assets. And then the following years, we'll start starting first with the organic growth that we have, which is really interesting, and there are assets that we know and we can control completely. So yeah, we'll keep growing. The company will keep growing, but this year will be a year of consolidation.
Okay, it's interesting. Actually, you use an interesting phrase there, which in mining sometimes makes me smile. It's like, we're interested in making money, right? Because when you get into production, a lot of companies kind of keep plowing the money back in the ground, and they kind of forget about, you still need to move the share price. You perhaps need to maybe consider dividends. You need to consider cleaning up the balance sheet, and it's that the money suddenly disappears. So it's a good aim. It's a good aim. Yeah. Right. Okay. Well, it sounds like there's a lot of news coming out soon. So obviously Q1's in terms of resources will be interesting for you. What do you think is going to move the dial? Because, like I say, you've come off the back of 18 months of silver price being slightly depressed, held back or not. I'm not going to get into that discussion. Your share price has held up relatively well compared to most of your peers, but what else is it going to take for people to recognize what it is that you've got? Will it be a case of paying down the Glencore position? Will it be the resource upgrade? What do you think it's going to take?
Yeah, that's interesting. Well, it's let me respond in a cautious way, right, Matt? The markets are savvy. The markets are knowledgeable, but I think we need to do what we know. I mean, what we know. No, we need to keep building these mines. We need to keep being disciplined. We need to make sure that our cash flows are and met our budgets. And eventually the markets will realize that the company is undervalued by all means. Just to give you an idea, our market cap today, you know better than me, but it's
150 was that?
150, right? And our yearly sales are north of $400 million. Like, makes no sense, no? And we're cash flow positive. Of course, this is just a recent story because we just acquired these assets, but I think it'll be important to make awareness throughout the year. So that's why I'm working with a channel like Riverside and make awareness is great for us. So we'll keep making our homework. We'll keep being disciplined, and we'll leave the markets to evaluate us and eventually recognize the company.
Well, I've enjoyed listening to the story today, Arturo. It sounds like you've done a lot in 2022. Set yourself up for 2023, and do come back on and see us. I'm intrigued by the kind of resource update and everything else that you've told us about today. So thank you for your time.
Thanks to you, Matt. A pleasure being here with you and with your audience. Thank you so much.